Hi guys, today we're going to talk about S&P 500, how things look like. In a 1 year, if you see, there's a return of around 26%, where YTD registered return is 3.45%, and it's about 202 point up. Where in 5 days, the return is slightly down, around 1% down, where last session it was up 0.53% up. So currently it is at 6071, and how things going to look like from here. So if you see, for the session going to go up, like if you see here, the future is up 0.30. It means that the next session is going to be up in the market. They will be, so probably I'm expecting the market going to be reaching around 6,100 in coming session, where the VIX is quite down, like 15.84. So we'll see the VIX also, and like how things look like. Last session, the utility sector, real estate, health is quite up. Industries, communication, consumer, all up. Even finance. So majority other than the IT. If you see from here, like 1 month IT given a negative return of 4.24%. And in this year also, YTD, the only the IT sector not given any return. Rest all the major sectors are given a good return, like communication to 8%, finance sector 7%. So if in the if you see the finance sector, which all the companies are there, the JP Morgan, Bank of America, Berkshire Hathaway, American Express, all of these companies are there. So finance sector is doing good. Like if you see the Bank of America share is really good, and utility and all. So if you want to track down the sectors, focus on the IT sectors. Okay, though it is not giving return currently, but focus on that. So in might be after some some corrections, might be they will be going to give a good return. So keep eye on the IT sector. Then the finance sector is good. Keep eye on the health sector also, and communication, and then you have industry sectors also in that. Well, if you see, these are the most attractive shares like Nvidia. So there was in 3 4 days back there was a quite double digit down in the Nvidia shares. Well, but it's quite there is uptrend like Intel, Tesla, and Ford Motors. If you see that valuation part, like from the starting with the 1918 and 80, with the P ratios of 12, it started with 1880 around, and now it's at 30. So in suppose in 50 years also, it's if you look the 50 years trend line, this is up, and in 20 years trend line, now it started with 18 is it was a below to 9 13, then there was a 19, then there was a peak of 30 40 around 40. Then there was a slight correction of the after COVID and is reached to 20. So what I believe the 20p is one of the best P in future if you want to invest in the market with good return. So because P already indicate you a return. Okay, so if the P is low, your portfolio return will be high. So if you're investing here at this P, your return will be more. So the P goes to 30 now. There's a P in last 10 years also is quite up, and there was a correction in the P in COVID was the P was around 40, 39. So P around going up, still is P going up since 20, and in last 2 years it's been also up. So there could be a reason like in 1 year last year 26 and now it's 30. So there are more chances that there will be a future corrections coming up. So if you're investing, is good. The market is going up, but after 30, like like you are in a danger zone of high valuations of P. So there could be a chance that there will be a negative. There will be a big correction coming up in the market. So in investing, make sure you're doing in a good way. Well, if you're able to see what happening in S&P in a technical chart, it already crossed the average RSI is going up. It already not going intersecting and going down. So it is indicating that if you see this box I have made in 6 December 24, and from here the it is in the same range momentum, and currently from here going down, and there are the three lines. One is like this line indicate that 50 days moving average is 100 days, and this is 200 days moving average. So currently, the S&P 500 is above 50 days moving average, is about to touch 6,086, and this is 6,100. So there are the more chances that the market is going to be up in next session. And if I is able to see what we can able to understand from the VIX, So VIX is going down, and the average of VIX, the bottom is of VIX is 12, and the average, what I believe is here, is 15. So definitely VIX is going to cross 15, and the support here is 14.33. So there's a more chance that definitely is going to be touching here at 14. So when there's a 14, the definitely market going to be going beyond 61, 6,100 around. So that's for P. Then I'm going to show you the ETF. This is a list of our ETF track down, and if I show the daily basis, like silver is going up. Okay, so I'll just show you the silver SLV and how things would look like. So silver is going up currently, and it's around 28.72. And for one day high, if I see the high was around 28.86. So currently is at 28.72 and indicating that it's definitely going to go up. So there's a more chance. The first target I'm expecting is 29. Then there's a target of 3 and 3.5% around in the silver. So silver look like a nice investment currently. And next, if you see the silver is given return, home constructions, gold was up. And in a week, if you see these are the green, and the healthcare is up. Then Japan, I track down Indian ETF, wisdom, and then financial sector. You have all Bank of America consumer, then finance, and then you have an ETF of Bitcoin. Then these are all are up. Like last session, only IT was down in a week. If you see, the US IT is down. Large cap growth is ETF is down, and so if you see from here, you have all the symbols. Okay, see if you want to track down the ETF, like I was just showing you, these are the ETF is down. Like SLV, then you have a GLD gold, then all like health ETF is IYH. So you can track down all the ETF how it is performing, and then if you want to invest in ETF, you can do that. Do your own research, and all I can share is my what I track down and all. So in a month, the ETF has given a good return where the Bitcoin is given 12.57% return, silver 9%, then financial services, the healthcare is also 6%. So if you see the last year, the healthcare was down. There's no return from the healthcare last year, 2024. But this year is starting with the return of 6.92 is really good. So overall, I'm saying the market going to be very positive, and I'm going to show you which other stock. Like I've shared two stock, Costco and Domino's. So in last my videos. So I hope you have tracked down the stocks and all. So well, thanks for watching my channel. I'm going to share you more about like how this week is going to be and next week how it's going to look like. Thank you for time. Thank you for watching my video. Do subscribe my channel.